Good morning. Welcome to the Risk Wranglers Derivative Desperados. Trading in uncertain markets, ones that chop. We're going to cover that today. What is one to do with options and stocks when markets are moving 2 to 3% every day? This is nuts. You can imagine VIX is high. We'll break it down right after the bell, which I don't have with me because I'm at SIBO. Ding. Oh, yeah.
No bell, but we got the music.
No bell, we got the music.
No.
Can you believe it?
I'll only wear my cowboy hat if you are. End of Marcus.
I don't have my cowboy hat with me. It doesn't fit in a bag very well.
I've got so much wear it on the plane?
No, I mean, I brought down to SIBO, I brought down my whole technology box, and it's in a roly-poly carry-on. I've got cameras and hotspots and microphones. You can't imagine all the junk I had to bring down here. Nuts. Good morning. Have you guys been busy lately or been busy? The question is,
it's been kind of calm, right?
Kind of calm. To trade or not to trade? I've heard all kinds of things, meaning someone might say, I'm a retail guy. I don't get in on bids and offers, and this would be great for them, the market makers. But I'm going to sit on my hands in these markets. I'm thinking you guys aren't doing that though, right? We're trading.
I mean, a little bit. It's mostly very small risk. I mean, in this kind of environment, especially if you're in stocks, your risk gets wider. I mean, every little move, it's almost all of a sudden what you thought was a diversified, safe portfolio that doesn't move very much every day. All of a sudden, the risk is going a little haywire, and it makes people feel a little bit more anxious than what they were before.
Yeah, I'm guessing the zero DTE short iron condor has been problematic lately.
Yep. You do not want to be short that zero DTE premium. I don't care how much you're collecting; it doesn't incorporate a 450-point move.
Right. It's insane. It's funny. My brother calls me once in a while. He trades as well. And he's like, geez, I had the short leg on the downside. It was at, it was up $80 out of the money, and it hit. He goes, it hit. I can't believe it. And then I covered it and it ran back up another 100. I'm like, geez, can you imagine?
Yeah. I think that highlights exactly the risks of getting involved in this market, right? That we are in a very turbulent period of price discovery right now, and no one really knows what the fair value for, forward earnings on the top 500 most liquid stocks is, because everything's in jeopardy thanks to one big orange man. And so long as that continues, it's going to have a hard time settling around, a fair or true price.
Right.
One big orange.
Well, it sounds like
Mark's going to get the IRS now on his case.
Yeah, right. His name's Mark. I'm Lex.
No, we're gutting the IRS. Didn't you remember that? Now's the time for all the financial crime.
So having said that, back to Trump and tariffs. So yesterday the market rallied so dramatically because he said he's putting a 90-day hiatus on the tariffs on all countries except China, which he's actually raised again. So obviously, it's not obvious. I don't know. Obviously, he's got a sole kind of purpose here with China and making them pay their share. And I was listening to Kevin O'Leary. You guys know him? He's from the Shark Tank guy.
Yeah.
He is
Mr. Wonderful.
I would not call him super conservative Trumper. He's probably a little bit on the left of center, but he is in favor of what's going on to the nth degree, and very, very, steadfast in taxing China. He thinks they cheat, they steal, and it's just awful what they've done to our imports. So I don't know much about that stuff.
Grifters don't have political lean. Let's be clear.
What's that?
Grifters don't have a political lean.
There you go. So I think
Good. Over the past, to talk about a little bit about the market, you were saying 2 to 3% moves every day. since we last spoke on this program, and I was wearing a different hat, the daily average absolute move, without looking, how much do you think it is?
The daily average absolute move. So in the S&Ps?
Yeah.
You're looking for like a point number.
Yeah.
Yeah. So like,
I was thinking percent.
Oh, percent.
I would say average.
170, 180 bips.
You said 1.8%?
Yeah, you're saying percent. I was going to say 2, but okay. So
the correct answer is 4.86%.
What?
That includes yesterday, I guess.
Well, April 3rd to 4th is 5.76. 4th to 7th is 0.8. That's the Monday. 3.72, 7 to 8, but then 11.28 from yesterday and 2.75 today.
God, that's insane. Well, I can tell listen.
Oh, these are absolute moves.
Yes.
Like the absolute high to low.
Absolute move. Yes.
Got it. Okay.
The so I'm the SPX is behind me, right? So I'm at SIBO in Chicago.
Yeah. Can you put in a trade for me?
I could. I'll yell out. I can hang my head over and yell down to the pit. But I got to tell you,
short iron condor on Mark's bill.
Yeah, put it on Mark's account. Short one. But it's interesting because when I come down here normally with normal markets, you can hear a pin drop back there. Everything is pretty electronically trading. Yeah. Mm-hmm. So they all have computers in front of them, and most of the markets are disseminated that way. In this environment lately, I've been down here for a few days. It is like the old days on the SIBO floor. Just the yelling and screaming and shouting is unbelievable. I had to come in this room. I'm actually in a conference room. I was trying to set up outside, but it's just too noisy. But they're going nuts. And what we learned is that a lot of the 0 DTE transactions almost all of them occur electronically in 0 DTEs. Anything that's longer dated, and it could be, longer dated being, 15 days and beyond, there is an element of open outcry. I'm talking about SPX only, right? There is an element of open outcry in those markets, especially when you get out to 100 days and beyond. You start seeing a lot more open outcry. But, people want, Mark, you always refer to this price discovery. I think the bigger players, whether they're retail or institutional, want to feel the market out, see what they can get out of a larger order with time to go. Does that make any sense?
Absolutely. Well, and with the electronification of markets, that's actually meant that I think top of book liquidity has gotten a lot more fragile. That we do have like tight markets out there, and they have decent size on them. They have better size than like those markets would have had 10 years ago or 5 years ago. But to get a true big order done, you need to have that feel on the market, because the electronic dynamic is going to be very skittish if you keep lifting top of book offers or hitting, top of book bids, that like the vol surface is going to move a lot more significantly with 10 lots than it is 100 lot.
Yeah.
It's, executed in open outcry.
Yep. For sure.
And also like on the 0 DTE, because, every little movement of, price alters the at the money pricing, or I'm sorry, any little movement of the underlying's price moves the at the money option price so dramatically, especially toward the end of the day, that you couldn't do that open outcry very easily.
Yeah. Yeah.
By the time the processes from their brain to their mouth, the price has changed by like 10%.
Right. Right. Yeah. And what are your thoughts on, I know we talked about some of this on the summit yesterday, with all the automation that's going on and bots, whatever you want to call it. Right. So some of this, automated workflow, even in the retail sector, do you think that exacerbates these moves? Because like you just said, electronically, you can really push things, it's milliseconds, microseconds, even. As opposed to the old days, Mark, when you were the old days for me, when I was on the floor, it was like, we had a hamster running on a pinwheel for our computers. Do you think it exacerbated some of these moves with automation? And either of you?
Yeah, absolutely. I think intraday vol is always going to be here to stay, and that's kind of an externality of increased automation. I think that, in the same, if you believe in circuit breakers, then the answer to your question has to be yes, right? Like if we pause trading because stocks are down too much and you need to give someone a cooling off period, or you need to give the market a cooling off period, then that's going to be the same thing as news gets digested immediately. the market's going to arrive at its fair price quicker overall, but it's going to be a choppier path because of the speed and reflexivity of electronic trading.
Yeah, although I do think that equilibriums are reached quicker. The problem is that the inputs are flowing a lot faster. So the equilibrium changes fairly, especially in markets like yesterday, the equilibrium changes very frequently. And, you know, in Voland, we see like the moves, like the structures, which are usually pretty, you know, consistent and well structured. They are all over the place. Like it's messy, like out there. I can't hear Lex, but I'll also volunteer that 2 days ago, before the Trump announcement, we started seeing, I don't know if you guys saw this at CBOE or something, or if Henry said something, but we saw a lot of condors being put on from May 2nd and like further out, like 30-day condors that were really wide. I mean, some of the strikes, 4650, 4700 on the downside, 5650, 5700 on the upside. I mean, that's a 100-point range. Or I'm sorry, 1,000-point range in an iron condor. And like there's quite a few of those kind of short gamma trades being put on between like 25 and 35 days out. I still can't hear Lex. So I guess, Mark, we can talk, right?
We can talk. I keep waiting to hear his voice chime in here. No, it's, I think my perspective on looking at this market is that you have to divide whether you're making investment decisions in this market or whether you're making trading decisions in this market.
Yeah.
And if you're looking at your 401k, if you're looking at your long-term holdings, like the cost of making a change here is severe, right? Keep buying, keep, allocating. It doesn't matter if you pay 530 or 525 in SPY, like that price doesn't really matter. Keep the long course and don't chop yourself up too much. But if you're making trades, make sure they're targeted and you're not trying to trade your investment account or invest your trading
make
account.
a plan and stick with it.
Can you hear me now?
With it is hard. Yes, we can hear you now, Lex.
I don't know. I'm obviously on the World Wide Web, and I'm on my phone on the hotspot, so you can imagine how good that connection is.
We just talked about automation and how fast
I heard it
computers
all.
work there at TiVo, and it's right behind you.
I just couldn't talk. So what
the traders behind you are sucking up all the bandwidth.
Yeah, they are. Sucks. It got quiet out there for a second when you couldn't hear me, and then now it's noisy again. So something must have just happened again. So my question was going to be, what do you do? What's the trade? And it doesn't have to be 0 DTE. And look at it, just for the folks, implied volatility is kind of stratospheric. Now, there might be an argument it's not high enough. I understand that. I would tell you that if you're selling iron condors or selling premium in this environment, you are getting taxed every single day. Now, that's not to say that it's not a good idea. There might be clever ideas to do it. Do you guys, what's your prescription here? I mean, this is an investment.
First, I hear that yelling in the back.
Yeah. So, I'd probably be into butterflies that are mixed strikes so I can take advantage of massive moves through it, is my guess. So I love that. I always love that, especially in these stratospheric volatility, implied volatilities.
Yeah. So
I can't do a short iron condor because I'll get taxed every time. I'll be rolling the hell out of it. So I'm not doing those. Lots of butterflies. Probably, I'm just trying to take advantage of the high premium with ratios of shorts, but never being short of units. My risk will be defined.
So right? I'll tell you this, because we had a long conversation about this in our Discord. What is the right, if you are an option trader, what is the right kind of trade to do right now? And, personally, I said, I do not want any part of short gamma because when VIX is high, it will get higher. It can explode. It got to 50 something right before the Trump, I don't know, what do you call it? Truth Social thing, the Trump social truth or whatever. Yeah. Yeah, I mean, so, we were looking at the environment. It's very high IV, which usually says sell vol, but do you want to sell vol when the average daily absolute move is 4.86? And the answer is really no. But the other key to us was skew was extremely steep. Vivix was at like 190 at one point, like setting records. And when you have steep skew, the best way to take advantage of that is long gamma verticals. And you could also keep your risk extremely low in a long gamma vertical. And you get, as indicated by the name, like long gamma, you get some strong gamma if you actually move to that level. So, if you are like 95% cash or 98% cash and you put in little long gamma verticals, you can cash out in this environment.
Yeah. So what do you mean by that? You mean like buy the higher strike put and sell the lower strike put and the opposite on a call? So you're basically doing the long iron condor, but maybe not as a four-legged option. It could be a two-legged or the put side or the call side. If you combine all of them, it's a long iron condor, right?
If you combine them, to strangle or something like that. Yeah.
And those might cost you a little bit of money to buy in this environment, right? So
no, that's what I'm saying. The skew, like because skew is so high,
because the skew is so steep.
Yeah, because the skew is so steep that sold option is actually not that. Sold option is not that bad of a price for you to sell when you have the closer ones. And like I said, keep your risk down to measure it in bips, not in percents. Like 5, like 10 bips or something like that.
Yeah. Now, Mark, would you push out a little bit in time to put some trades on with options, or are you still looking?
Oh, maybe.
Am I off again?
Yeah, maybe speaking to, like some of the more like medium to longer term structures, I think, events like this really highlight like a lot of the rebalancing risks that options introduce into using them as like overlays into a portfolio. So like if you have options that are expiring April, next Thursday on the serial April expiration, like, in many cases, like I've had some positions that have been on for 2 and 3 months in that level, but it all comes down to what's happening now. And so I think the rebalancing risk of this volatility now is a really good argument for why you want to spread your positions across months if you're going to be using options as an overlay and tranche them across potentially different strikes, different expirations. And to the extent that you are getting pinched on some of those, then maybe you do use the opportunity, like you said, Lex, to roll up and out or roll kind of down and, maybe make some tweaks around the edges. But I'm generally, to the extent that it's an investment strategy, you don't want to be caught in last minute market timing questions right now, guessing whether I'm getting out at 4,900 SPX or 5,300 SPX in the matter of 48 hours.
Right. Yeah, I think I know if I were on the floor, I'd have probably fairly flat gamma and short a bucket load of Vega. So I would have something around that. I know I would be selling the living daylights out of this fall. Safely.
Probably in the back months, though.
Yeah,
you're probably selling the second and third month VIX at 40 here.
Yeah, and it's going to look like a lower absolute number, but it's on the scale of where things mean revert. It's way above, any sort of mean out in those farther out months. And I got to buy higher vol in the front, which kind of sucks, but I don't want to have all that negative gamma because you just whip yourself to death in this, right? Especially the way market makers trade. We're selling bottoms and buying tops with negative gamma a lot.
The back part of the curve has really come in quite a bit, though. Like even 35 days out, I don't have the VX futures, but 35 day out at the money SPX is down to 28 vol.
Is it really?
Yeah. Yeah, May expiration's at like 28 at the money now.
Wow. Unbelievable. What's VIX doing today? You guys have it in front of you real quick? I don't know if I have it.
I see the VIX at 37, up 4 points.
Okay. Up 4 points.
Yeah, that sounds right. Yeah, that sounds right. It's 33 last night. Okay, good. Anything else? Trying to think. Talking to some of these traders, they're battle weary. I just haven't seen them jump around and bounce around as much as the last several days. So it's good. They're tired. They're smiling though, but they're tired. So. It's lighting up again. Can you hear it again?
Oh, I hear them. Yeah, that's
okay.
Kind of cool.
It was very quiet there for a second, and then it just started going. Let me see what's going on here. We head out.
Nothing.
Same. Yeah, same stuff.
Nothing really.
All right. Cool. Well, obviously we're going to keep an eye on this, and we'll kind of pay attention to these wild swings. I'm gonna get back in the saddle in front of the machine finally, probably next week, with the trades.
I have maybe a dumb question. I'm just looking. Do we know why SPY is down quite a bit more than SPX? Like I see SPY down 3.5%, where SPX is only down 2.6.
Yeah, so could it have been after the cash close, and then we had futures trade differently after hours?
Yeah, but I don't think futures moved that much after the close.
Yeah, I remember I was, after the close here, I was busy, so I didn't pay attention. But that's typically what happens. You reset when move after the close from futures. SPY closes at 3:00, right, Central, and then if futures keep trading, maybe it has catch up to do the next day, or vice versa.
I thought SPY traded until 4:15.
Yeah, so did I.
Did it? No, doesn't the closing print though 3 on the cash underline? The options might trade till then. SPX definitely trades till 3:15, 4:15 your time.
SPX.
We're gonna get an answer for that.
I don't know. Yeah, get an answer.
Well, that's the only way to explain my theory. If one cash closed and the other one's still trading, that would be the only reason.
Yeah.
Or will a dividend? If SPY paid the dividend, they would be.
Could be there. Yeah.
But they don't. I don't think they paid a dividend last night. They just paid a dividend like a week ago, 2 weeks ago.
Gotcha. Okay. Cool, man. All right, guys. We'll keep an eye on this. I don't think it's going anywhere. I mean, I haven't been trading very much at all. I got to be honest. It's crazy, but if I were on the floor, I'd be trading a lot, but not off floor. Too tough.
Well, OCC hit a volume record on I believe that was Friday. What did we do? 103 million contracts?
Oh yeah,
108 or something like that. So that's interesting. Before we run, I was in New York when that happened at a conference. And they're guessing that it was going to be a record, but they were thinking they were going to get to 100 million contracts in a single day, OCC. And it wasn't the day that it happened. They were thinking maybe this week it was going to happen. But they hit it, and it eclipsed it pretty good, the 100 million. First time ever, right? I think it was like 107, 108 million. Henry was very happy when I talked to him yesterday.
Anyone that is in the structural alpha community is very happy with these markets, and OCC
doing
double its record of 2 years ago and double its average of 5 years ago.
Yeah. Well, last year, the average daily volume was around 45 million for the year, give or take a million. I can't remember exactly, but let's call it 45 million. I haven't seen a 45 million print all year, meaning it's been well above it for the whole year of 2025. Maybe a random one here and there.
February, yeah.
Most of them are 50 million, 60 million, 70 million. I'm like, God, this is insanity. Unbelievable explosion. So
10 years ago, 20 million was an average day.
Yeah. Exactly. It's insane. This is just nuts. And we thought that was busy, by the way.
Oh, yeah.
10 years ago.
We had single-digit OCC volume or single-digit million OCC volume days.
What's the zero DTE percentage now? It's still around the same, right? Like 50%?
Yeah, Henry said yesterday on the show.
DTE?
Yeah, 50. He said 51%. I think is. So, yeah, but that's and he did say it's not shifted from back to front. It's newer business. People are really trading up, and he said a lot of retail people are using it. So, I said let's get zero DTs for everything. What the heck? And then there's that obvious problem of settlement with settlement. Physical settlement and all that sort of thing. So, anywho.
Well, all right, guys. Like zero DT on VIX is pretty weird, right? Like, what is, like, that's just a straddle.
Yeah, that's right. That'd be tough.
Yeah,
that's right. I want cash settled on stocks. I know stocks aren't going to go for that, but my God, I hate having to get assigned or take delivery of something. I'm on the golf course on a Friday, and I got assigned. Great. Oh, this is wonderful.
That's one of my torches. I believe the Amex is experimenting with cash settled stock products.
Yeah, are they?
That they have them in like some of the
exchanges does it. Yeah. The others are going to follow. I think it would be kind of cool, and maybe even make them European exercise, right? Just make it like an SPX contract, and boy, for retail that'd be terrific.
Mm-hmm.
So takes two elements out of it.
Although I don't think you'd be eligible the way the tax code's written. I don't think you'd be eligible for 60/40 1256 treatment, because I believe the specific tax code says something about for options on broad-based,
Indices. Yeah.
It doesn't have to do with the cash settlement. It specifically relates to the underlying.
Right. That makes sense. Yep, makes sense. Okay. All right, boys. Good chatting. We'll keep an eye on this craziness. Anyone taking up on the day today? Anyone at all? I will take up on the day for the right price.
Yeah, I was about to say. I mean, up on the day is not out of bounds.
What is that?
Okay.
54.60, something like that.
Yeah, no, it doesn't have to close there. Just a print. Make it green on the
one touch.
Yeah.
So the one touch, whatever, double the delta of what it is now. The delta of that 54.60 is 12. I'm reading. So that gives a 1 in 4 chance that we touch up on the day.
It's about right.
I mean, yeah, 0 DTE vol is whatever, is a mugs game, but it's like 90 something. And, the straddle still has us potentially moving $90. So moving 140, 1.5 straddles, that's far from, it's well within bounds.
I will say, I think right now, based on what I'm seeing in Voland, we're probably going to have another dip down to like 52.50 or something like that before we'd have a chance to bounce. So I'll take you up on it.
You'll take me up on it? Okay.
I'll take your other side on green on the day.
Okay. But you're giving me 5-1 though, right?
4-1. I'd say 24%.
I just said, my 100 gets me 500. Yeah.
Well, you're pushing these odds, Lex.
Yeah.
I need some edge.
I said 12.5 delta, not 10 delta.
Oh my God.
How about 3-1 and we'll meet in the middle? How's that?
Yeah, right. Sure, we will. All right. Pretend like we have this bet on. Let's see what happens.
All right.
Boys, good chat. You guys have a great weekend. Drink some good wine, Mark. I know I will. I earned it this week.
Yeah. What'd you have last night? You were out downtown in Chicago.
Yeah, I was at how did I say this? Vela, VELA, which is a kind of Mexican-inspired, really fancy Mexican-inspired. It's delicious. We had a couple bottles of we had a couple bottles of Zinfandel actually last night. I love Zinfandel.
Perfect for Mexican food.
Yeah, it was really good. And I'm feeling it this morning. I woke up at 3 a.m. in the hotel room, TV on, watching the news, out cold, glasses like this on my face. One of those nights. It's only because of the whiskey I had to close the night down. That was probably
Lex and his camera are hungover.
I was going to say that's the hardest part about trading these days is that you have an exhausting day one day. You need to go out and go to the bar and get it all out and chop up what happened with the day, wins and losses. And then you get up and do it all over again. And it only compounds on, how difficult the trading is.
Rinse and repeat, baby. Yep. All right, guys. Have a good weekend. Good seeing you. I'll see you next Thursday, I think. I'm just trying to think quickly if we're here. All right. Have a good one, guys.
Yep. Take it easy, Lex.
Mark.
Hasta luego. Happy trading.
Yep. All right, guys.
Bye, Lex.
I'm still here.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.